Chapter 2, Double Entry System 1. In this chapter, we'll be looking into classification of accounts, ledger, debit and credit factors, and the impact on debit and credit factor, expenses, definition and the categories, revenue, its definition and the items listed under revenue, classification of assets and liabilities. Let's look into the classification of accounts. Remember the terminology cleared. C capital, L liability, E expenses, A assets, R revenue, and D drawings. Are numbered from 1 to 6 and we use the same numbers if it is repeated in today's session. Now, let's have a look at the format of a ledger. The left side is your debit and the right side is your credit. Write the account name, date, details and the amount in pounds on both the sides. Now, let's identify the debit and credit factors. We use the terminology such as dead click, pearls, SPP. Now, let's focus on the first row, dead click. D for debtors or trade receivables. E expenses, A assets, and the second D for drawings. All these items are debit factors, whereas C capital or equity, L liability, I income, C creditors or trade payables are all credit factors. Row 2, pearls. P purchases, E expenses, A assets are all debits. R revenue, L liability, S sales revenue are all credit items. Last row, SPP. S is the only item debit sales returns. P provision, P purchases returns are credit items. If an item has a debit balance, to increase, it should be debited. And if the item is debit, to decrease, it's credited. If an item has a normal balance of credit, to increase you credit, to decrease you debit. Expenses. These are day-to-day running expenses or cost of a business, such as salaries and wages, telephone charges, commissions paid, non-current asset disposal loss, increase in provision for doubtful debts, irrecoverable debts, advertising cost, discount allowed, and non-current asset depreciation. Revenue. The income from ordinary activities of a business, such as rent received, commissions received, discounts received, non-current asset disposal profit, decrease in provision for irrecoverable debt, and recovery of debts. Now, let's define assets. These are resources owned by a business which can be classified as non-current assets and current assets. Non-current assets, LMVF, which are the resources owned for more than a year by a business, such as land and building, machinery, vehicle and furniture. And current assets, CTRBC, are resources owned by a business for less than a year. And the examples are given there. Liabilities. These are the amounts due by a business, classified as non-current liabilities and current liabilities. If it takes more than a year to pay, it's non-current liabilities such as bank loan and debentures. If it takes less than a year to pay, then it's PBT, payables, bank overdraft, and trade payables. Now, let's summarize. Now we have gone through the classification of accounts, format of a ledger, debit and credit factors and its impact, defining expenses and listing items of expenses, revenue and its items, classifications of assets and liabilities.